What is going on, guys? Welcome back. Commentary for you. Want to wrap the night up with an investing video. Got some Phototronics from you guys as free shares. You know, end of the month though. Use my link down in the description. I'm a Webull preferred influencer. If you deposit more than $100, you'll get 2 free stocks guaranteed, $8 or more. I actually sold off these Phototronic stocks. They're a semiconductor company. They basically assist with flat panel production. I just don't know that it's something I need. Let's talk about the unfun part of this. Free stocks. That's the fun part. Here's the unfun part. Okay, a month of volatility. A month where I'm down, honestly, 10% if we discount what happened today. This is the reality of investing. This is what not everyone is built for. But I'll tell you what this isn't. It isn't me losing money. It's just companies losing value. And what do you do in a time like this? Well, you can panic, you can sell, you can drive yourself insane. You can tell yourself you've made horrible decisions and you're going to lose everything you have. Or you can do what I do. And that's assess the market and dollar cost in. And that's exactly what you're looking at. From August to October, dollar costing maybe once or twice a month. Now, what was I dollar costing into? Well, Neuberger Real Estate Trust. Okay? The reason I'm doing that, you can see we're down in a lot of positions. We're down on Cisco, which I thought was a great buy at $40. I think it's an even better buy at $35. We're down on CVS that I thought was a great buy below $64. It's an even better buy in my opinion at $55. Now, we're up on Global Water, and I could have bought more into Global Water, and I actually thought about doing so. The reason I didn't is because their payout percentage is a bit high, and I'm concerned about it. I'm not concerned enough to sell because I still know water is essential, and I still feel like they're in a strong business line, but they're not making the revenue that they should to pay their dividend, and that has me a little bit worried. So while I could have bought in more, chose not to. Kronos, those were free shares from you guys. Realty Income, I would have loved to have bought more, but we just didn't have the funds available, and it's trying to make the best out of a down market. I don't know that the market is going to continue to go down another 10%, so you have to make educated decisions now. Pebblebrook Realty, again, something that we got for free through the stock program. Gladstone Land, I did add more in. We're up to 4 shares. And I have a great trust in Gladstone Land. I trust in their numbers much more than I trust in Global Water. But NRO, like I talked about, looking at it, there's people that will tell you I'm crazy to buy any type of real estate, much less international real estate now, but I really have a firm belief in that portfolio. I really, truly trust that they can make their dividend payment. And I felt that even since the collapse in March, they've been undervalued then, they're undervalued now. And this is a stock that I can hold for a very long time and receive a return on. Sure, it's not going to be a lot of a return at 14 or 15 shares where we'll probably end up, but it's enough of a return to warrant risking the purchase. Opera, the web browser, has been stable. PTY, the Corporate and Income Trust, has been stable, even though we're down a little bit. Cladera, I probably regret not selling more of. This was a stock that we had 10 shares of. They obviously came in for free. I sold them at like $12.20. They're down to $9.85. Probably could have only left 2 and been okay. And the aforementioned Cisco Systems, really, I think in the long run, when you look at the market and the volatility and the fear, one of the things that surprises me is how does it impact a company like Cisco, right? Is Cisco really going to go anywhere? Is Cisco really impacted by this? By other people's fear? You have to be strong when other people are afraid. Everyone in their investing journey is in a different position, okay? I'm in a much different position than someone in their 60s. Someone in their 60s may have thousands of shares of Cisco that have to get out today because they need that money to survive. They need to pull that money into some other trust or some other fund to give them the money they need to continue. Right? That's their assessment of what they need to do with Cisco. They could have bought into it at $15 a share and want to take all their profits today, and that's okay. I'm in a different position than they are. That's one of the things that I think people really overlook in the market. When you look at fear, when you look at your sell-offs, you're looking at someone else's decision. Trust me, whenever a stock is sold, for the most part, there's someone there waiting to buy it. If I sold my share of CVS and took that $10 loss today, number one, I've truly lost that $10. But I promise you, there's someone, maybe like yourself, on the other end of it, waiting to buy that CVS stock at the $10 discount from what I bought it from. And I made a value proposition for CVS when I bought it at $64 that I thought it was a good deal. So why wouldn't I feel like it's a great deal now? I mean, CVS is embedded in the healthcare of this country. Healthcare in our country is needed more than ever before. Healthcare is never going to go away. You're always going to need doctors. You're always going to need insurance. You're always going to need medicine. You're always going to need a place to go get these prescriptions filled. And CVS is literally at the core of every one of those segments, maybe too much embedded into those segments for some people to actually like what they do as a company. So when I look at all this volatility, when I look at all this panic, I'm not going to sit here and tell you that I wake up raring to look at my portfolio down $1,000 in a month. But what I'm telling you is, I'm not concerned with what happened last month. I'm not concerned with what happened the last 4 months. I'm concerned with 4, 5, 8, 10 years from now. And what can I do, no matter how small the amount of money, to put myself in a better position? And what I can do is assess the numbers, educate myself to what I'm purchasing, trust in companies I believe in and understand. And from there, if I make poor decisions, then I at least made educated poor decisions. But if I run out and just grab the next SPAC that I see, or grab the next hot stock tip that somebody told me on the internet, then I'm not giving myself the benefit of the doubt of trying to educate myself to what I'm doing and make the best decision for me. That means when those picks don't work, when that get rich quick off this stock scheme doesn't follow through, then I don't know who really was to blame. Was it me for making the uneducated decision, or was it the person that gave me the bad information? And everyone's been burnt. You know, I just will tell you right now, a good bit of that loss was involved in Multiplan. Okay, I still believe in Multiplan. I have 50 shares of Multiplan that I bought around $10. The stock right now is trading for about $8. Would now be a good time to panic and sell out? To some. I'm not worried about Multiplan on a $3 loss right now. Right? I wish it hadn't happened, but I do know from an investor standpoint, there's a lot of shares in the market. There's a lot of fear in the market. There's a lot of people concerned with money they've lost. I'm not one of them. I know that sooner or later, the educated investor, sooner or later, the market as a whole will accept the stock. They really don't have any other option not to based on its size and what they do. Multiplan is a fantastic company that's, again, based in healthcare and making sure that healthcare is done correctly. Those are always going to be needs. They work with some of the biggest insurance companies in the marketplace. So ideally, I'd like to be up $3 a share, but I'm not. And that's okay, because all it's doing is providing me better buying opportunities now to set myself up to be back in the green later. I said on Twitter a couple weeks ago, if you buy these in the red enough, they will turn green. It's just the nature of dollar cost averaging. You can't get around that. But you have to make sure what you're buying in the red is a quality enough stock or something that you trust or believe in for that to actually happen. If not, you're going to chase it into the red till there's nothing left. And right here, I feel like is a pretty firm grasp of a balanced portfolio. I'd like to add a little bit. Honestly, would like to add Hanes. Hanes is one of the first stocks that I ever actually did a video on. And they've rebounded so well, it's hard to trust to buy them now. And that's going to be the problem hopefully I run into sooner or later. Will I want to continue to buy NRO at $4.25 or $4.40 or $4.50 when I'm sitting here today buying it for $3.60? That's the other side of this. Getting stocks as they increase in value and not wanting to buy back in because you feel like you're overpaying. But you know what? You overpay some days and you underpay some days. And as long as you trust in what you're doing, it's going to balance itself out in the end. And right now, we're in that part where it's balancing itself out. No need for someone to panic unless they're in a certain situation that I guess they feel like that's the only option they have. And in that case, if they want to sell quality stocks, I'll be there to buy them at a discount all day long. Love to know your guys' thoughts on this. Appreciate you checking it out. Back in the week with more commentary.